Welcome to Pressure Points. Our topic is takeaways from Apple's March quarter results. As of the time of this recording, which is about an hour after the earnings call ended, the stock is up just over 6%. At the beginning of the call, it was up about 7%, so call it hung in there. The reason why I think the stock jumped on the earnings was less about the March quarter. It was basically in line. More about the June guidance, which was in line also with the street, up 1.5% revenue year over year. But the whisper numbers, the expectations were that they were going to guide down by a few percent. And so there is a relief that June is actually better than expected. The business is holding together better than expected as it kind of comes to the trough of the iPhone 15 cycle. Separately, they increased the buyback by more than people were expecting. They took it from $90 billion to $110 billion. Most people were expecting them to kind of reiterate that $90 billion number. They do that once a year when they report their March quarter. And so combination of those two, I'd put 80% of the move related to the June guidance and 20% related to the buyback. So that's all the near term, but those are not the key takeaways here. There's a lot more meat than just the June guidance. And I'll go through 5 key takeaways. The first is related to AI, and they came out swinging when it comes to AI. Remarkable how this company has not wanting to mention the topic because they probably felt it was hype to now saying in Cook's words that this will impact most of their products. Generative AI will. Not just AI making the products better, but generative AI. And I think that speaks to the potential around generative AI and Apple coming to that realization. So, of course, we're going to get more of that in June, more of the details, and they did stop short of any of the details about what these products are. Cook did mention that their AI strategy is going to capitalize on their hardware, software, services approach, which makes sense. He's going to bring that up. But he added the privacy piece to it. And this is something that all along I've believed is a major competitive advantage for Apple when it comes to AI is people trust Apple. And I think when you get into what is referred to as personalized or agent or agentic AI, where you ask the machine to do something for you, and then it goes out and grabs some of your personal data and actually performs multiple tasks on its own, in that world, the concept of privacy becomes really important, and it seems like it makes sense that Apple is going to make sure that consumers know that. I do believe that it's going to take a year, 2, 3 years to get to that agentic AI. I think that we're going to start to see some of AI, generative AI in Apple's products as early as this fall with updates to the operating system and maybe even around the next iPhone 16 and them kind of playing up the silicon side of what they're doing as benefit to AI. So things moving forward, not a ton of details, but Apple's in a unique place relative to their privacy approach when it comes to AI. Second topic is Capex. And if you heard my preview, you know this was my main pressure point is what's going on with Capex. My fear was that we were going to see something that happened with Meta where they talk about spending more to build the infrastructure for AI, and that would spook margins. And in fact, that did not happen. The guidance for margins in June are essentially in line with what they just reported at record highs. And the question did come up early in the call about how to think about Capex. And CFO Luca's response was that they approach their Capex in a unique way. He said, we do the same thing with our suppliers. We do some of the Capex ourselves and some of it through suppliers. And when it comes to data centers, he said, we build some of our own data centers ourselves and we do some of them through third parties. And we'll continue to do that. That was his response. My initial read on that was there's no gotcha moment that, if there was going to be some big boost and jump in Capex, we'd heard about it then. And he's talking about this kind of 2-layered approach where they can do some of it themselves and kind of offload some to third parties. And as I've reflected on that comment, I believe that really Luca didn't tell us much about what to expect in Capex. All he did is to say we have a 2-avenue approach to it. And I think ultimately you can still increase Capex by a lot working through third parties. And so I kind of amending my previous optimism around that comment and leaving it at they seem to be navigating this in a very different way, not spending $8-10 billion a quarter like the other mega caps are. My guess is they're probably spending a couple billion, and just given their raw size, we just don't see it. And so I am not expecting a gotcha moment, but for the record, I don't think he really told us much when it comes to Capex with his response. The next is related to guidance. I covered it a little bit, but it is worth mentioning the key takeaway there beyond just the guidance is that the business is holding together. Services are going to continue to grow, probably around 14% year over year. The street was looking for 11%, and it grew at 14%. It's going to be in that kind of range. They did say in the back half of the year the comps start to get tougher, and we'll start to see some of the growth in services decline. But overall, the business held together and is holding together. The fears that I and others had about what was going to happen in China didn't play out. China was down 8% year over year versus down 13% in the previous quarter. So I think that just the system that they have, Europe, for example, is in the EU, that impacts services, and it's not impacting it now. And so some of those changes that they've had relative to regulation doesn't appear to be having an impact. And so the guidance, the key takeaway there is that it's just the business is holding together. Next, talk about a little bit more about China. That came up, I feel like it was every third question on the call had something to do with China. It got a little bit old, but the bottom line is they said all the right stuff, that they're committed to China, see it as a big opportunity, but collectively they're seeing all these other regions, whether it's Indonesia, India, China, Saudi, Mexico, Brazil, collectively those regions are becoming, in Luca's words, big. There's a question, does it meet what the $70 billion that they're doing in China every year? And he wouldn't give any sort of context to how close that was. But in general, China is still a really important part of this equation for Apple, even though Cook has made a lot of effort in the past few months. Look at his trips over there to try to diversify not only the demand equation, but the manufacturing side. One other piece on the China diversification, all those other countries I just listed off, Apple does have smaller market share in those, so Luca believes they can continue to grow at higher rates there just because they're coming off of relatively small market shares. And last, talk a little bit about Department of Justice. Not much was said. Cook reiterated that Apple hasn't done anything wrong, kind of held the company line. My sense is we're not going to hear anything for a long time. Like, this could be late or beginning of 2026 before it even goes to trial. And so I think put all things together here and all things consistent. The stock in after hours, as I mentioned, up 6%. I think if it weren't for the DOJ, we would have a stock that would be above 200 because this is an overhang and investors are going to want to see some sort of resolution. And so even though it didn't play a big role on the call, I just want to remind people we're probably going to have to wait a little bit here, 6, 12, 18 months before we get any resolution. I feel confident that Apple's going to end in a really good place and at a higher place after all this is said and done. More to come on that later. But that is those are the 5 takeaways from this earnings. On behalf of Pressure Points, I'm Gene. Bye for now.